Hello, welcome back to Core Finance. I'm Matt Brown. I'm joined by Craig Earlham, who is Senior Market Analyst at Oanda. And we're going to look at the dollar CAD. Now, we've got the Bank of Canada meeting today, rate decision, unlikely to change anything, but they have shocked the market in the past. Just talk us through this chart you brought along.
Well, I think this chart basically is a chart of the Bank of Canada. They say they've shocked us twice in the past, and you look at that move from May through to September, and that is a signal of the shock which the Bank of Canada brought about. It was around May time that they started talking up the potential for a rate hike. And then we go around to September where the last rate hike took place. It looks as though we're not going to see another one this year. We could see a relatively neutral Bank of Canada today. And that's why we are seeing that correction. We initially saw a correction back into the 24s. And the kind of dollar strength that we've seen really start to materialise over the last month or so is starting to take over a bit more now. If the Bank of Canada does offer a neutral stance today, then I think this does open up the potential for the dollar CAD to continue to correct, particularly in keeping with the fact that, as I've said before in these videos, I do think it's going to be a positive end to the year for the US dollar. Tax reform, hawkish Fed chair announcements, and even deputy chair could be looking at a combination of Jerome Powell and John Taylor, both hawkish. We could be looking at a Fed chair and a vice chair there, which would be seen as hawkish. This could be dollar positive as well. So I think should we see a break through these current levels, you've got that previous high around 27.50. This is long-term support, as you can see here as well. So we're not just going through previous resistance, we're going through long-term support as well. Then I think 130 could quite comfortably be on the cards. And again, that's where you start hitting another very interesting zone. That's the 50-60 1.8 fib gap. It's also the 233-day simple moving average, and it's long-term support as well. Add into that the psychological impact of the 130 number, and that's going to be a very, very big test for this pair.
Fantastic. Craig, thanks very much for joining us.
Thank you.